Lululemon down 40% year to date and trading close to its 52-week lows is seeing a rebound after reporting their Q1 results, as you have shares higher by nearly 10% in the after hours. So we have to ask the question, is the bottom in for this stock, and are you able to finally buy the dip on this one as you have a rebound in the shares once again in the after hours? Hey guys, hope you're doing well out there. It's time to check in with shares of Lululemon Athletica, a first here on the channel, but certainly is no small apparel maker with a market cap close to $40 billion. You don't get a dividend on this one, but now you are getting it at a reasonable valuation. I'd say close to 22 times an earnings multiple. The reason I say at least a reasonable valuation is because in the past, this name has traded closer to a 40, if not 50 times an earnings multiple. So as you've seen shares decline close to 40% year to date and over 12% just over the past month alone. And while Lululemon has been able to raise their earnings, the valuation is looking far, at least more reasonable than it has in the past. We'll talk more about the valuation as we head into this video. Now, Q1 revenues came in at $2.21 billion. That was good for 10.5% growth year over year, came basically in line with what Wall Street was anticipating. In terms of GAAP EPS, that came in with a beat at $2.54. I'm seeing estimates were closer to $2.40, and the high end was near $2.56. So Lululemon coming in just shy of the high end estimates. Now, one of the reasons I think the shares are up close to 10% in the after hours is I think because these results were honestly better than feared. This one was coming into this print with a lot of fear, considering in their previous Q4 they had revised down their earnings for the upcoming Q1, and so the fact that they came in with that beat and then also they came in with a raise on their outlook, I think those two things alleviated those fears, allowing shares to pop in the after hours. Now, comp store sales, otherwise known as same store sales, came in higher by close to 6 to 7%. That's on a constant currency basis. That's basically the stores that were existing, already open. Those grew at 6 to 7%, and this is a company that continues to open a couple more Lululemons each quarter, and so they finished this quarter with 711 company-operated stores. Now, on top of that, you did have expansion in your gross margins, up 20 basis points, coming in at 57.7%, but at the same time, you saw your operating margins decline nearly 50 basis points, coming in just shy of 20%. So this is a company that's able to control their cost of those sales. Certainly as inflation has gone down over the past 1 year, that has allowed them to increase those gross margins, as basically the cost of those goods have simply come down. When the raw material, the freight cost, things like that come down, your gross margins go up. Now, where Lululemon still not really able to control costs, maybe is on the SG&A side, where they're still expanding those SG&A costs, reducing their operating margins. So this is a company still close to 20% on those operating margins, and certainly they're still guiding for full year operating margins to come in at 23.3%. So as we head on into the year in Q2 and beyond, this is a company that's expecting those operating margins to steadily rise throughout the year. In terms of the current quarter we're in, that's Q2, this is a company expecting 2.4 up to 2.42 billion in revenue. Consensus was closer to 2.45, so coming in underneath, but that's something Lululemon has guided for in the past, so certainly not a shocker to Wall Street. That would be growth of close to 9 to 10%. Also coming in underneath on the EPS side, as they're guiding for 292 up to 297 in EPS. For the current Q2 estimates were closer to $3.03. So coming in underneath both on the revenue and earnings side certainly would be a shocker, but that's something Lululemon sort of has announced in the past in their previous quarters, that for the current quarter they will be expecting lower revenues and lower earnings. Where they did beat on guidance is for the full year. Certainly they're keeping those full year operating margins intact at 23.3%. They're also keeping their full year revenues intact between 10.7 up to 10.8 billion. The estimates are closer to 10.76, so right in the midpoint of what this company is guiding. Where Lululemon did raise its guidance is on full year EPS, now expected to be between $4.27 up to, $14.27 up to $14.47, and consensus was closer to $14.44 for the full year. And so there, Lululemon did surprise to the upside as they raised their full year EPS outlook from $14.14. That would have been growth closer to 11%. This is now a company expecting growth north of, I'd say, 12% on that bottom line. And especially what's more exciting is the fact that the forward earnings multiple has come down along with the sell-off and the ongoing increase in the bottom line earnings. This is a company now trading closer to, I'd say, 22 to 23 times, accounting for this after hours move of nearly 10%. So for a company, I think that still has a pretty decent runway of growth ahead of itself at 22 times certainly is more reasonable. I wouldn't say it's a screaming buy. I wouldn't say it's a run out there and steal deal type of situation with Lululemon, but you do have a far more reasonable valuation closer to the low 20s rather than higher than a 30 times where we've seen this one trade out for a long time. And as you look ahead, this is a company expected to do close to 11 to 12% growth on those bottom line earnings over the next, I'd say, 3 to 5 years. And so that forward earnings multiple will continue to come down as you have those earnings continuing to go up. So I think that's your upside with Lululemon, is the fact that this one certainly not trading at a outlandish valuation at this point, is, I'd say, closer to its fair value than maybe it has been at any point in its history. Now, I think one of the reasons why this company has seen that 40% year-to-date sell-off is the fact that their chief product officer did resign at the end of May, and I think that certainly contributed to some fears in terms of the products that, or at least the pipeline of products expected to come down over at Lululemon. And so what they did was they revamped their marketing and design team in order to accommodate for that change. So I think that's just one of the reasons why this company had a pretty dramatic sell-off, is you had your chief product officer resign. The other reason, I think there is a fair amount of competition, at least in the yoga apparel space. You certainly have your giants like Nike, like Adidas to some extent, but then you also have the new upcoming yoga brands like Alo, like Vuori. Certainly those companies, I haven't used their products, but I've heard they are picking up a fair amount of traction. And so just from a competition perspective, I think there's a fair amount of it, and I think that keeps Lulu's margins under pressures, at least on the operating side, where they will have to spend more on the marketing, on their design and SG&A costs. And then lastly, I think this is a company that caters its products really to the middle to high-end consumer, and those are your consumers that have been really sliced and diced by inflation the hardest. Certainly those middle-end consumers have been hit with inflation the most, and I think those are the ones that are likely to pull back on a Lululemon set of shorts or Lululemon yoga pants, certainly because those are discretionary items at a time where inflation is really hitting your wallet. Those are some discretionary items you pull back on first, and I think because that's their customer base, that is another thing that has kept sales and margins under pressure. And as you have inflation easing over the next couple of years, at least, hopefully, you should see those consumers once again come back to Lululemon, again, barring any major change from one of their competitors that pretty much attracts their main consumer base away from Lululemon. So I think those are a few things to keep in mind. The fact that their chief product officer left, the fact that competition is certainly heating up in the space, and the fact that their main consumer base really got hit with inflation the hardest, I'd say. Now, apart from that, you do have a lot to like over at Lululemon, especially on their financials. This is a company sitting on nearly $1.9 billion in cash and cash equivalents. That is down year over year by close to $300 million. But when we get down to their cash flow, we'll see where that cash left the building. Not always a bad thing, especially when you use it towards a buyback. All other things looking basically in line, your inventories staying roughly flat year over year, and you're looking at $3.76 billion in current assets, and that's offset by just $1.38 billion in current liabilities. In fact, all of their total liabilities come in at $2.6 billion. So this is a company that has more current assets than all total liabilities combined, and certainly not a ton of debt on their balance sheet, nothing really outstanding where it would concern you from a balance sheet perspective. For an apparel maker, this is actually a phenomenal balance sheet. The fact that you have quite a bit of cash on hand and quite a bit in current assets. So that's something to like over at Lululemon. In terms of net revenue, that came in at $2.1 billion, like we spoke, close to 11% growth year over year. Your cost of goods also not growing nearly as fast, allowing them to bump up those gross margins just by a little bit, as you had gross profit come in at $1.28 billion last year. You were closer to 1.15. Now, this is a company that's still spending heavily on SG&A expenses. They don't really break it down in terms of what is their selling and marketing expense, but you can assume a lot of that is made up within this $842 million. And so operating income coming in at $432 million. Last year, you were just north of $400 million. So on higher revenue, you were able to raise those operating income, but you did see a 50 basis point decline on those operating margins. And then another thing to notice is the fact that this is a company that nearly tripled the income it's earning on the cash on its balance sheet, sitting on nearly $1.9 billion of cash. And the fact that you have higher interest rates that these banks are providing, you'll earn a lot more interest income on that cash. And so that's meaningful, at least to Lululemon at this point in their timeline. Now, net income coming at $321 million, up close to $30 million last year. We were at 290. So all things to like over at Lululemon from a financial perspective. Pretty solid financial statement, as you have growing earnings, you have growing revenues. You did see a slight decline on those operating incomes, but I think that's something Lululemon will correct heading into the next few quarters as you have higher operating income expected for the full year. So some things to like over at Lululemon. The other thing you see with this one is you are reducing your shares outstanding down to 126 million. Last year you were at 127 million. So this company also executing on that buyback, which they in fact added to in the most recent quarter. We pull down that $320 million net income figure down to our cash flows, and we get to operating cash flows of right around $127 million for the last 3 months. This is Q1 over at Lululemon. So $127 million in operating cash flows over the last 3 months. Certainly not terrible, but not as great as we'd like to see, especially for a company closer to $40 billion. But one thing I do want to point out is that this is a company that tends to earn a lot of its operating cash flows in the fourth quarter. As we see, the operating cash flows tend to balloon in the Q4. That's the holiday time period for Lululemon, where they see a ton flow into their operating cash flows. On top of that, similar story on their free cash flow, as for this most recent quarter, that came in at negative $3 million for their Q1. But again, free cash flow is something that they tend to stack up on in the Q4, in the holiday quarter, where they earn an outlandish amount of their full year free cash flow. You see last year, free cash flow for the Q1 came in at a loss of $91 million. Now that has narrowed down to just a loss of $3 million, as this is a company spending heavily on property and equipment, but continuing to bolster up those operating incomes year over year. And so likely heading into next year's Q1, this is a company that should be free cash flow positive for all 4 quarters. At least that should be the hope over at Lululemon. And so majority of, in fact, all of their operating cash flows and a little bit more gets used up in the purchase of property and equipment, or otherwise known as CapEx. And so this is a company that's still doing a $300 million buyback, and that is really where the cash exited the building. We saw that $300 million decline on their cash pile, and that comes straight down to the repurchase of common stock. You see year over year a significant acceleration on the buyback of their shares. That's something I actually like to see when your stock is down nearly 40% just year to date. I do want to see a company get more aggressive in terms of their buyback. They're willing to buy back their shares at a lower price and not doing an aggressive amount of stock repurchase when their shares are higher. And so financially, this company is actually very sound. You have a lot of cash on the balance sheet, you don't have a lot of liabilities, and you are just on the verge of producing positive free cash flows in the Q1s, and you continue to exceed free cash flows as you head closer to the holiday Q4 later on in the year. And so lots of things to like over at Lululemon just from their financials. Now, what you don't like to see is a breakdown from trend from their technical. So this is a company that was on a steep, I'd say rather predictable uptrend, call it from early on in 2022, and since then had been on an uptrend that finally got broken from this big sell-off, and you're once again seeing a rebound now, almost touching up to the bottom end of that trend line. Certainly if you have shares in Lululemon or you're looking to get in, what you want to see is a decisive close above the bottom end of this trend line, where this one can once again continue to make higher highs and higher lows, really since it has been since early 2022. Where it currently sits is closer to $338. That's in the after hours, and you pull up a 5-year chart of this one, it's basically trading at the same level that it had been in June of 2020. So this is a company that's really traded sideways over the last 3 to 4 to even 5 years, and that's really where the valuation has come down, while they've been able to grow their earnings over that period of time. And so this is a company that really has a lot of consolidation, and between this called $300 range down to $294, and then all the way up to, call it your $350, you can even actually bump it up closer to $370. That is the range where I would like to accumulate shares of Lululemon. Certainly from a valuation perspective, makes a lot of sense, as you're now in the low 20s on an earnings multiple, and from their free cash flow multiple, that's going to continue to expand as this company continues to generate more and more free cash flow. So this is the range where I would look to accumulate shares of Lululemon if you are interested in this one. Certainly you have the ability to come up here, get rejected, and then continue to head lower and make another set of lower lows. Certainly you don't want to see a breakdown underneath, I'd say largely underneath $285, $86 a share, because then you have once again the lows at $250 back in question, and certainly you don't want to break that either from a technical perspective. And so where the stock is currently, I think a decent level to at least begin a position, and ideally you accumulate within this range of the low 300s up to, call it $350 a share, and that's where you build out a position in Lululemon over the long term. This is a company that you would look to hold, as they're expecting that steady close to 11 to 12% earnings growth over the next, call it 3 to 5 years. Now, I did have a discounted earnings model for Lululemon in order to just determine what its fair value today should be. And so if we assume that $14.37 EPS mark for the full year of 2024, that comes in at the midpoint of what this company is guiding for the full year. So we take that 1437, we apply a 12% growth rate over the next 5 years on those earnings. That basically is in line to just slightly ahead of what's expected over at Wall Street, as they're expecting somewhere around 10 to 12% growth over the next couple of years. I apply a 22 times earnings multiple, certainly not as wildly expensive as, again, once we've seen in the past, but I think one that does deserve somewhere close to a 20 to 22 times and an earnings multiple, considering this one is a company that's expected to raise those margins as it heads along. We apply a negative 1% share dilution. This is a company expected to continue to do that buyback, I'd say close to 1% on a year-over-year basis, and you want nearly a 12% return with this one over the course of each year. We apply a 10% margin of safety, and we get to a fair value close to $300 a share. So certainly in the after hours, this one is closer to $338, but was near $300 a share during the regular trade and has traded down to that level in the recent past. So I think $300 as a fair value, not outlandish in my opinion. Certainly if you do think the growth is a bit too optimistic and you expect this one to grow slower, somewhere call it closer to 10%, and if you apply a 20 times earnings multiple, your fair value likely closer to $250. But I think between that $250, call it up to $330, that's really the expectations I would have for a company like Lululemon. I think a stable brand in the apparel business, at least for now, and barring any major competition disruptions, I think this one can be a stable apparel brand for years to come. And especially as inflation comes down, I think the consumer will once again return to Lululemon and shop there. That was my take on shares of Lululemon. One could be bought at this level, at least accumulated slowly from a long-term buy and hold. Wouldn't go all in at this point in Lululemon, but certainly can be an interesting long-term buy and hold. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.